Hi guys, welcome back to the channel. In today's video I'm going to be showing you the ICT Power 3 concept and see how it can enhance your trading strategy. What is PO3? The PO3 or power of 3 is basically composed three phases being accumulation, manipulation, and distribution. The end of a phase automatically initiates the next phase. Say if the accumulation ends, the manipulation begins. When this ends, distribution begins. That's important to know because one phase projects the other with the help of standard deviation. Next, let's talk about the three phases of PO3. Number 1 is accumulation. Accumulation refers to the phase in where smart money or large institutions accumulate positions. Price moves inside a clear trading range and shows no willingness to move significantly higher or lower. The price forms equal highs and lows, gathering stop losses and liquidity above or below these boundaries. Identifying accumulations is a very important part, or identifying the PO3. Without knowing where the accumulation is, then the PO3 will be wrong. Here are some things I look for when identifying accumulations. Small candles, no displacement, small range, and maybe the close of previous PO3. The reason for the accumulation phase is for the market makers to enter as many orders as they would like. Another important part of the ICT Power of 3 is the manipulation. This is where you expect the price to trade before the real move occurs. This phase is a false move, where smart money influences retail traders into believing the price is breaking above, thereby engineering liquidity by taking stops before expanding in the opposite direction. A fake-out signals that the breakout was not genuine and was orchestrated to sweep liquidity above the range while inducing breakout buyers into the market. Once smart money has collected enough liquidity, the manipulation concludes. How do you know when the manipulation ends? Okay, I usually use HTFPD arrays above, if bearish, HTFPD arrays below, if bullish, SMT divergence, and finally inside the 2 to 2.5 STDV area. Distribution. This is the final stage of the PO3 cycle and the stage that should be traded. The distribution phase is when we open our trades as smart money traders. This move should take out a targeted level in accordance to our daily bias. This is where you will see the expansion in price. I use reasons such as MSS, reaction from area of expected reversal, inverse FVG, large displacement candles, and consolidation in manipulation to start the distribution phase. So basically here we have accumulation, manipulation, and distribution. Keep in mind that this setup isn't limited to a specific time frame. You can use it on both lower and higher time frames. So let's into the chart and look at a few examples of this. Now, let's take a look at gold on the 15-minute time frame. We can see that the market is forming a range or consolidation area, with two rejections from both sides indicating that the price is indeed consolidating. This creates liquidity above and below the established boundaries. If we're bullish, we want to see manipulation below these lows to engage the sell-side liquidity, after which we can expect the price to push higher. Conversely, if we're bearish, we'd look for manipulation above these equal highs to go short and anticipate a drop in price. Let's see how this scenario unfolds. As we observe, the next two candles break below the range, engaging the sell-side liquidity and trapping breakout traders who assumed this level had been decisively broken. Now that the price has returned inside the range, it confirms the manipulation phase. From this point, we'll look for a buy entry. In this scenario, we have an opportunity to open a buy position at the CISD block, anticipating a price push higher. We'll place our stop loss below the swing low and set our target according to our trading plan or STDV. The power of 3 pattern completes with an aggressive distribution move to the buy side. It's important to note that, like any other trading concept, the power of 3 may not be as effective when used in isolation. It's best to combine it with other smart money concepts to achieve better results. Now let's look at bearish example. Here we have gold on the 4-hour chart. We can see that the price is forming a consolidation range with rejections from the top and the bottom. Buy-side and sell-side liquidity are resting above and below this range. Once again we're looking for a stop-loss hunt and a failed breakout to confirm the manipulation phase. Let's see what happens at this point. We have a breakout above the range engaging the buy-side liquidity and trapping breakout traders who assumed this level had been decisively broken. Now that the price has returned inside the range, it confirms the manipulation phase. From this point, we'll look for a sell entry. We can use FVG, order block and OTE zone in this example for entry. To take advantage of the PO3, you need to know how to identify each phase. It is important to understand where each phase starts and finishes. When one ends the other begins. Opening PO3 accumulation phase starts. When it ends manipulation begins. Once the manipulation phase has ended we then move to the distribution phase. This is crucial as each phase projects the next and we measure this using standard deviations. In the accumulation phase, we identify the lowest price range from the low to the high to forecast potential manipulation in bullish trend. We utilize the 2 to 2.5 standard deviation zone to anticipate possible price reversals. Similarly, during accumulation, the highest price range from the high to the low can also indicate manipulation, with the same 2 to 2.5 STDV zone in mind. To determine when the manipulation phase has concluded, consider these three key indicators. 1. High time frame points of interest within the 2 to 2.5 STDV range. 2. Smart money technique or SMT divergence. 3. A shift in market structure. Once all these criteria are met, we can confirm that manipulation is complete and look forward to entering the distribution phase. Remember, as one phase ends, another begins. To forecast the next phase, we need to properly use the Fibonacci tool. For distribution, anchor it to the lowest price leg down before the market structure shift. This corresponds to the last movement of the manipulation phase that creates the lowest swing, projecting potential upside in distribution. Conversely, for a bearish expansion, anchor it to the highest price leg up before the MSS, using the last movement of the manipulation phase that establishes the highest swing to project potential downside. In this phase, we anticipate that the price will expand in the opposite direction of the manipulation phase. Our target remains within the 2 to 2.5 standard deviation zone for potential reversals and retracements. If the price closes strongly above the 2.5 STDV, we can expect the expansion to continue up to 4 standard deviations. However, if the price fails to close above the 2 to 2.5 STDV range, we should expect a retracement back to the equilibrium range of the current price range from low to high. Overall, we can measure all three phases of the power of 3 with precision using standard deviations. Let's look at an example on the chart. Here we have a range where the market doesn't have a specific direction, and there are liquidity levels above and below this range. The market makes a downward move after taking the liquidity below and price back into the range, and here I confirm that manipulation has occurred. On the other hand, if we go to a higher time frame, we see that during the manipulation, the price entered the 4-hour FVG and was then propelled upward, which increases the validity of this area for us. After the manipulation phase, with the evidence we have, we can enter a trade on the block CSD, and if we want to set a target based on the standard deviation, we should draw a Fibonacci from the high to the low of the manipulation phase and set the target between -2 and -2.5. Okay, if this video was helpful, please give it a thumbs up, as it greatly supports the creation of more content like this. Thank you for watching, and see you in the next episode.